Exercise 2.5, we're going to take the transactions given and put them in the worksheet that you can see on the screen. So the first transaction we're given is March the 1st, the proprietor deposited $35,000 cash to start the business. So I need to complete the accounting equation for each of these transactions. So I've got the asset section on the left in green. That must equal whatever's on the liability and owner's equity section in the pink and blue. So the first thing with this transaction is the business has more cash, and therefore what goes up on the other side, we have capital increasing. The owner's made a capital contribution. Secondly, the business bought an office desk for $1,800 cash plus GST of $180. So remember, the twofold effect of accounting means at least two things must be affected in the balance sheet after every transaction. Can be more than two, but at least two. So in this case, we've bought new office furniture, so we have an asset increasing. Been charged GST, so that will reduce my liability to the government, and I've actually got less cash at bank. So looking at the two sides, the asset side balances at negative 180, and so does the other side, the liabilities and owner's equity. March the 3rd, bought stock for $10,000 cash plus GST of $1,000. I have more stock. I've been charged GST, which reduces my liability. And again, I've paid in cash, so my cash at bank will go down $11,000. March the 4th, bought an office computer for $5,000 on credit from City Computers plus GST of $500. So as with the previous two transactions, I've got an asset and I've been charged GST. What's different is that there will be no transaction in the cash at bank section here, like there was with the previous two transactions. What will happen this time is that instead a creditor or liability will go up. To the two sides balance, I've got assets going up 5,000 and I've got liabilities going up 5,500 less the 500 GST for a total of 5,000. Then come to the most difficult transaction, which was dealing with a sale. So we've sold goods that cost the business $2,500 for $4,500 cash plus GST of $450. So the advice you were given was to complete each part of this transaction separately. Let's start with the sale first of all. There's the cash the business has received, $4,950. So that is actually made up of two amounts. You've got $450 of GST we've collected that doesn't belong to the business. That will increase our GST liability. The $4,500 represents revenue, and revenue increases owner's equity. But we learned that to make a sale, we've got to have a cost of sale. So we had to sacrifice some inventory costing $2,500, so stock will decrease. And when we sell it, that becomes what's called a cost of sale expense, and expenses decrease owner's equity. March the 6th, paid for advertising $500 plus GST. So in this case, I've spent $550 made up of $550. What's it for? I've been charged GST of $50, so that'll decrease my liability. And lastly, that's an expense, and an expense will decrease owner's equity. So what I'll do is total each column up down the bottom here, and there's my total assets, and then I'll total each of the liabilities and the owner's equity, and then I'll be able to figure out whether I've got this to balance by do my assets equal my liabilities plus owner's equity in the bottom row. So adding up the assets, I've got $40,720, got liabilities of $4,220, and owner's equity of $3,650. So looking at the accounting equation, does that balance? And if we add together $4,220 and $36,500, it does in fact equal $40,720, and that's a good checking mechanism to check whether we've processed all of these transactions correctly.